Hi, and good day, distinguished researchers, respected colleagues, and honored guests. It is a great pleasure to address at International Conference on Management Research and Economic Development 2026. Conference like this actually provides a platform to discuss important ideas for researchers, policymakers, and practitioners so that they can help us to shape the future of management, economic systems, and institutional development. Today, I would like to discuss a transformation that is both financially significant and institutionally complex. The ongoing transition of Pakistan's banking system from conventional risk-based banking towards fully Islamic banking system that prohibits the interest element in the financial transactions. Unlike many countries where the Islamic financial banking was evolved because of the market demands, Pakistan represents a unique case where this transition is actually driven by judicial mandate. The objective is very clear. That is the elimination of interest-based banking system entirely and establish a new parallel banking system that is in line with the Sharia principles. And the final deadline for this conversion is December 27. However, such a transition is actually is not going to a transition or the conversion of commercial banking into Islamic banking based on some technical financial reform. It involves a deep institutional restructuring, regulatory adjustment, operational transformation within the banking systems, and changes in the market perception. Therefore, the question that motivates this research is quite straightforward, yet profoundly important. What are the major challenges that the banks are going to have, they are going to face during this transition process from commercial banking to Islamic banking? Okay, let's start with, let me share my today's topic with you. Okay, this is what we are going to discuss today. So the aim of this research is actually to identify the challenges in this transforming from conventional banking into Islamic banking. And my name is Sajid. I'm from Faculty of Management in Economics, Sultan Education University, Malaysia. I'm working as international faculty member. Before going into discussion, let me briefly provide an overview what we are going to discuss today. So to understand the transformation of Pakistan banking system, it is important to review its historical context. The foundation begins with the independence of Pakistan in 1947, when the country was established as an Islamic republic. In 1949, the objective resolution was promulgated that actually states that economic system of the Pakistan should align with the Islamic principle, with the Sharia principle, including the banking sector. Later, in our Constitution of 1973, specifically Article 38, subsection F, mandate the elimination of riba from every economic activity in the country. Pakistan made this first practical impact at the attempt at Islamization in 1979 when they introduced interest-free financial institution. Later on in 1981 to 1985, the government also experimented with profit and loss sharing accounts and Islamic financial instruments. Later, in the later year, in year 1991, the Federal Sharia Court declared interest as un-Islamic. That was the turning point in the history of Pakistani banking, commercial banking system. Further developments followed, including the introduction of first Islamic banking policy in 2001 and the establishment of the full-fledged Islamic bank in 2002 as Mizan Bank. More recently, the Federal Sharia Court issued a landmark judgment in April 2022, directing the government and the State Bank of Pakistan to eliminate riba, that is interest, from the banking system completely. And they set a deadline that all this transition from conventional to Islamic bank need to be done by December 27. The State Bank of Pakistan, keeping in view the direction of judicial mandate, the State Bank of Pakistan then announced a roadmap targeting full conversion by December 27. So this conversion is actually underway, and the conventional banks are facing some sort of challenges. That is the objective of this research, to identify what are these challenges they are currently having in this transition. Okay, the transition expected to entail a radical change in the banking infrastructure, regulatory system, and financial instrument. Noteworthy, strong institution mandate, judicial directive, state bank guidelines, all are the supporting elements were provided to the commercial banks, but despite of these support, the progress remained uneven. The study of ICMRED 2025 claimed that the commercial banks were expected to transfer 50% of their operation to the Sharia compliant modes by January 25. However, majority of the commercial bank in Pakistan failed to achieve this target. That is a question mark on the directive, and that is not in line with the judicial directives. Okay, State Bank, there is another report from State Bank of Pakistan 2025 reporting that Islamic banking deposit amount to approximately 8.4 trillion, represent only 25.4% of the total banking deposit in Pakistan by March 2025. That should be more than 50% by this date. But if we look at this aspect, this indicates a gap between policy expectation and realized transformation. Okay, keeping this in view, based on this gap between policy intention and institutional outcome, this study asked the following question: what are the key challenges influencing this transition from commercial banking into Islamic banking in Pakistan? And the objective is to identify and analyze the main challenges that banks face when they are trying to transit from commercial banks to Islamic banks. Understanding these challenges is an important thing, not only for Pakistan, but it is important for the other countries who are planning to shift their operation from commercial banking to Islamic banking, because in the literature, it was argued that the Islamic financial system is more resilient as compared to the conventional banking, particularly in case of financial crisis. Okay, let's have a look on the literature. In the literature, different challenges were identified, but the studies that identified these challenges were not empirically actually examine the relationship between these factors and the transition. Okay, then the transition studies were not actually carried out on the banking sector. They were carried out in some other industries. So the factors that has been discussed in the literature are not directly actually representing the factors for the transition of banking sector. Okay. For example, legal and regulatory challenge arises when existing financial laws that were designed for the interest-based banking system is not going to work for the Islamic banking systems. Secondly, institutional and operational challenge include issues such as human resource shortage, the professional staff that is well-trained to execute the Sharia compliance banking system, IT infrastructure limitation, and the product development constraints. So these are the institutional and operational constraints the banks are going to have. These things were discussed in the literature. And then there is a third challenge that was discussed in the literature. It was about customer acceptance, awareness of Islamic banking principles, and trust in the Sharia compliance banking. Although Pakistan is a Muslim majority country, but still, if we look at the deposit, as I mentioned in my problem statement, 75%, around 75% of the deposit are still with the commercial banking. People are not actually trusting the Islamic banking system, and only 25% of the deposit are lies with the Islamic bank until March 2025. Okay, this study is actually an attempt to identify the factor that is actually causing a gap between the realized transformation and the intention of the judicial directives. To address the research question, this study adopted a mixed method research design, specifically an exploratory sequential approach. Here, we conducted three in-depth analysis interviews with the key stakeholder representative from State Bank of Pakistan, Habib Bank Limited, and Faisal Bank. And then there was a focus group discussion that was conducted involving Sharia scholars, representative from commercial banking, representative from Islamic banking, and there were some person from academia as well. The purpose of conducting this study as a mixed method or exploratory sequential approach was that because the factors, the challenges were not clearly identified. So the purpose of quantitative phase was to identify the main themes and challenges impacting this conversion process. Okay. The qualitative data was analyzed using thematic analysis. All this analysis was performed manually because we don't have sufficient interviews to execute with the NVivo or some other software. And due to this limitation, all the thematic analysis was performed manually. During the coding process, it followed a three-step coding process. We have some initial coding, then we got focus code, and lastly we got theme. So I'm going to combine the initial code into a group at the focus coding level, and then finally I'm collecting or combining all the relevant focus coding into a specific theme. So based on the analysis of these three in-depth interview and the panel discussion, we finally come to know that there are three key themes or the three key challenges that the commercial banks are currently having as a challenge in this transformation process. Okay, what are these? That is the market and societal challenges, institutional and operational challenges, legal and regulatory challenges. So based on these thematic analysis, we are going to have a conceptual framework. The conceptual framework was built based on the interviews and the focus group analysis results. So we got three hypotheses, which states the model proposes that three categories of challenges influence the transition process. That is legal and regulatory challenge, institutional and operational challenge, and market and societal challenges. Each of these variables was hypothesized to influence the transition of conventional banking into Islamic banking. These hypotheses were tested using quantitative data. In the quantitative data, we use a survey method. We developed questionnaire from the studies, from the literature, and we use a 5-point Likert scale questionnaire. The 500 questionnaire was distributed among banking employees, and out of that 500, we got 360 as the usable questionnaires that we use to test the hypothesis. Okay, in terms of demographic, the data was collected from 273 respondents from commercial banking and 87 respondents from Islamic banks. In terms of gender, majority of the respondents were male. In terms of their career level, majority of the respondents were from middle level management. Okay, in terms of age, majority were belonging to age group of 26 to 35 years. And in terms of experience, majority of them were from the experience class of 6 years to 10 years. Okay, in terms of scales reliability, as I mentioned earlier, initially we perform a thematic analysis and then we try to look for the variable, the construct that has been tested in the prior studies. So the most suitable construct that we got for this research were having a reliability of 0.69. If we look at for the dependent and independent variables, all of these got a reliability of 0.69. That is an acceptable range for Cronbach alpha. Okay, then coming to the correlation, if we look at the correlation result, bivariate correlation, we can have an idea that the legal and regulatory challenges are the key, have a strong correlation with the transition process. In other words, the other variable, institutional and operational challenges, is also having a moderate level of correlation with the transition. On the other hand, market and societal challenges has a weak correlation with this transition process. Okay, in terms of R-square, we got the value of 30%, which means these three variables collectively explain this transition by 30%. Although it's not a significant value, but as you know, this is a mixed method study. So there are other factors as well, and we got very limited data from the respondents. We only conducted 3 interviews and 1 focus group study. So there may be other factors that are actually impacting this transition. Okay, then we got a significant F value. That means the model is theoretically correct. Okay, in terms of regression analysis, we got legal and regulatory challenges as a significant predictor of transition. Then we have institutional and operational challenge as a significant predictor of transition. Unlikely, as contrary to the expectation, we were expecting a significant impact of market and social challenges, but unfortunately, this was insignificant. In conclusion, let's move into the conclusion. Legal and regulatory challenges were having a strong impact. They were supported as the p-value was less than 5%. So regulatory pressure forces modernization, the transformation. Compliance is not a burden, it's a catalyst. Okay, then we got institutional and operational challenges. Again, it is supported by the p-value results. Internal problem in staff, skill gap, and some other issues pushes bank to change. Main point is to starting point. Okay, then comes the regulate market and social challenges. Customer demand and competition alone doesn't drive the transformation. Okay, what are the recommendations based on these findings for the legal and regulatory challenges? The mandatory regulatory approvals, hiring experienced compliance officer, training on regulations, and conducting internal audit to ensure compliance. These are some measures that can be recommended based on the findings of this study. In case of institutional and operational challenges, to improve the liquidity, alternative funding sources such as Sukuk and Islamic deposit, this can be used to improve the liquidity issue that has been reported in the interviews as well. Okay, then lastly, it comes market and societal challenge. there is a misconception about the public, as I mentioned in the problem statement, that 70% of the funds are still with the conventional banking. So there is a misconception that actually Islamic banks are not truly Islamic in their operation. So we need to correct this misconception in the public through seminars, workshop, and media campaigns. Okay, so these are the recommendations we could have based on the results of this study. And that's all from my side. Thank you very much to the organizing committee of International Conference of Management Research and Economic Development 2026. If there is any question, please feel free to contact at my email address, that is sajid@fpe.upsi.edu.my. Thank you very much once again for your attention. Have a nice day.